Welcome, traders. So this is for the week commencing Monday, the 24th of June. We're very kind of close to the midway point of the year. And in terms of economic Canada news for the week upcoming, there's nothing too significant. I'm not worried about crude oil inventories. I'm not worried about consumer confidence. There's nothing really there's nothing that I don't think is a big thing here. I would kind of be interested in what is the US GDP quarter on quarter, also any potential shocks to the system of jobless claims, not really worried about that. And then again, I think GDP for the UK. So effectively kind of GDP is really what I want to pay attention to from a fundamental perspective. But overall, it does appear as though things are sort of ticking over in the right direction in general. And therefore, these would really just be injecting volatility into the markets. All right, that being said, let's go across to the charts and have a look at what's going on there. Okay, so starting off with the VIX again, we're still sitting in what I'm just going to call low volatility areas. In terms of the general market sentiment seems to be relatively calm and ticking over. Let's have a look at the dollar index. So really the weekly chart is a good indicator here. We can see it's creeping to the upside, that dollar continuing to strengthen across the board. The monthly as well within the range, pushing back up towards the top of the range. Potentially, it's going to start to work its way up towards that to align with the November elections. We'll see how that goes. Looking at euro dollar here as well, largely sideways within the monthly chart. That really does give you some clarity, because when you look at it on a weekly basis, it's sort of in a bit of a downtrend with lower highs, lower lows. On the daily as well, lower highs, lower lows, so more bearish than bullish. And so it's reasonable to expect it to continue to head lower this coming week. Sterling as well, showing a really nice rejection of that resistance level around that 27.50 level and then pushing lower. So again, also within a range on the monthly. I expect that continuation to the downside to continue, but it's not as weak as the euro is, relatively speaking. Excuse me. Aussie dollar as well, just not showing a lot of real direction here. It's just a mess on the weekly. And so again, that's supported by just a little bit of a creep to the downside to that dollar, just edging, just a little bit, sort of edging Aussie dollar down, pushing it down a little bit here, the Kiwi as well, battling with that level of resistance. Let's have a look at dollar yen. So dollar yen continuing to push up to the upside there. It's supported, it's enhanced, certainly by the stronger dollar. I'm going to deviate from my usual thing this week and quickly run through some of the currency crosses to have a look at opportunities there. Also want to update my analysis on dollar Swissy. So for me, in principle, I'm still expecting the longer term, or at least let's say the medium term over the coming, or sort of over 2024 for the Swissy pairs to head higher. So I want to have a look at all of those. Dollar CAD as well, still range bound. So again, you're seeing with quite a few of the majors against the US dollar, not a lot of direction at this time. There could be various reasons for it, but what it doesn't really mean is high probability, safe trading opportunities. There just aren't a lot of money-making opportunities there. Okay, so first off, I want to run through all the yen crosses. The trend, that momentum is still to the upside there. So still money-making opportunities. Again, this is euro yen. Let's have a look at pound yen. The structure is pretty much the same. The yen is just weakening against most of the other pairs, and therefore there are high probability relatively safe trading opportunities there. I'm cautious, of course, with the Bank of Japan wanting to change this and turn it around. This is not going to last forever, and especially the stronger the trend becomes, the more anxious they're going to become about it, because it becomes clearer that it's out of their control. And so I've seen them intervene in the past, and I know how damaging that could be. So how do I manage it? I think it's really more of a risk management approach than a trading opportunity. As a trading opportunity, it's clear which way the market is going, so it's easy trading. But is it, how safe is it, and what do we do? What if the Bank of Japan intervenes? Really, at this point, it's about lowering risk, either not trading it at all, lowering the risk, or making sure that, we're prepared to take profits and exit the trade, so that we're not sitting in the markets for an exposed period of time. But you could just see here very clearly all the yen pairs offering very high probability trading opportunities. A little bit overextended on the daily. So for the dailies, I need them to do a retracement, but for intraday opportunities, they look pretty good. Euro GBP, we should see that euro weakening against the pound, because we can see how the pound is stronger. So that's certainly a trend that makes sense. And then let's just very quickly have a look at the Swissy pairs. So I'll start off with Euro Swissy. My expectation here, ladies and gentlemen, is just that I'm with the bullish divergence. I'm looking to see this change direction. We can see it's come down now. It's below the 50-period moving average, which is not ideal. So I was looking for a nice green candle above the 50-period moving average, finding support on it, and that hasn't really happened. So still looking for that to be the case. We have now got some green candles showing, but we have definitely retraced further than I would have expected. In this case, we've got a slightly higher one here with GBP Swissy, which makes sense. It's stronger. Aussie, Swissy also producing one here. So this could very well be that bottom turning point for the Swissy pairs that I have been waiting for. But it certainly came back a lot further. Kiwi Swissy makes the most sense. It's a beautiful break of resistance and a retest of support. You've got the 50, 20, and 10 in a bullish formation now. You've got the MACD in bullish territory. You've got an uptrend in place. All of this points to the probabilities of this turning around and heading up, and seeing that with most of those pairs. So there's a couple of exceptions where we're below that 50-period moving average, but we've also produced some bullish signs, a nice bullish engulfing bar here with CAD Swissy. So what am I looking for this week? I'm looking to see a break above the high, ideally across the board, and looking for these to start heading back up to the previous highs, and ideally maintaining that my previous analysis where they then obviously continue to the upside. If they don't, if they continue to fall down, then I'm going to reevaluate that. And obviously, that's what we do as technical traders, is just have to reevaluate that if the evidence starts to contradict what our expectations are. But if my analysis is bang on, in other words, that the momentum has shifted from bearish to bullish, we should start to see all of them starting to head higher, which should last several months at the very least. It gets harder to predict where a market is going to be much further away, but for the immediate moves, my expectation is the weekly would start to go back up to the upside. So those are the ones I'll really be watching. Right, let's move on and have a look at let's have a look at some of the commodities. Let's look at gold. So gold, no real trend at the moment, sort of lower highs, lower lows. It's still range bound. It has found support here, but it's range bound. So there's just no clear direction, which means it is pretty much anyone's guess as to what it's going to do between these two levels. It can, right now, I would say that it should be attempting to head higher, but of course, just remember that it's losing, that it just has no clear trend at this time. When we have a look at silver, silver is very, very similar, but silver has now reached a much nicer turning point, and therefore I would expect the momentum to be more to the upside there. And then we'll have a quick look at natural gas. Natural gas is range bound at the moment here. Just look at this behavior. I'd be interested to see if we finish up with a nice bullish candle and we have a series of high lows, then we'll be forming a potential breakout pattern. It's creeping towards that bullish territory, so we'll see if it's ultimately going to turn around. We've got light crude, which is pushing back up. That is worthwhile noting, that nice bullish engulfing candle there. We are stuck within a triangle pattern here, so ultimately my expectation is it'll break out. The question is in which direction, but overall, again, there's no real overriding direction at the moment, and therefore it's sort of futile or not really constructive to say, well, listen, this is what's going on, because again, it could change direction as well at any point. And we'll just compare this to West Texas crude as well. Also, again, we've still got that bullish engulfing bar right now. And it implies that momentum is more sort of slightly leaning towards the upside. Okay, so sort of a 60-40 or 55-45 weighting to the upside, just that little bit more bullish than bearish. Let's move on to the global indices. So again, with the Dow here, it's producing that high low, nice bullish candle here. So that pressure is more to the upside than it is to the downside. We've got some strong resistance over there. So what we could be leading towards, which is a very kind of reasonable idea, is we're leading towards a breakout to the upside. My only concern with that was that we had this, that we've got so much pressure. It would always be nice to have a correction, but we've had this correction here. So no, there's a lot of, and in fact, this consolidation, which is what it is, of a sorts, is a bullish breakout pattern. So that's what I'm looking forward to seeing, that build up and push to the upside. The S&P continues to retrace. This is really good. I'd be looking for some nice potential buying opportunities in this area here as well. Monthly looks really good, not overextended. The weekly looks okay as well. So potentially this week there could be a setup anywhere in this area. So let's just mark that out. And this is kind of what I would be looking for in this area. And that means probably that we will finish to the upside by the end of the week, or at least a little bit higher. So we'll come down, turn around, and then start to head back up. NASDAQ as well doing the same thing. So very similar thing is to look for any entry opportunities in this area this coming week. Russell 2000. Remember, what I'm waiting for here is to see it actually leave this consolidation. So once it starts to do that, then it's likely that if it and then moves to the upside, then that would be just another tick in the box that we're sitting in quite an impressive bull market. Possibly, it's just going to wait till November before it decides what to do. So we'll see how that plays out. FTSE again has produced this bullish candle. So this is the area we're looking for that to pull back to. There is our bullish weekly candle. So that looks good. So this week I'll be looking for a turnaround here and a break to the upside, but the FTSE holding up. I would have preferred to see a deeper retracement, but where it is now, we'll hold out for now. You could see it trying to affect a double bottom there, and we'll see if that is enough for it to give it the juice to go. The DAX as well, producing a nice little bullish candle here. So will we break the high before we break the low, and then work our way back up? This is likely to offer some resistance in this area, so I'll keep an eye on that level there, but we'll see if the markets can do it. They can, on the monthly, they look very much as though they want to consolidate before going. Interesting would be to see the market sort of drop below and then finish up higher as well, so that it kind of comes down to connect to the moving averages and we get a nice bullish rejection candle there would be great. S&P looking nice and bullish. I don't know what you think about this, but it's also, again, a little bit of a triangular pattern here, but that looks really nice and bullish, and looks like that's going to attempt to push higher this coming weekend. Of course, it is June, so potentially the markets want to just kind of finish up the month a little bit more bullish. The Nikkei, just straight kind of consolidation. So when this does ultimately break out, I would expect that in the longer run, of course, to head higher. Let's move on to individual equities. Okay. So Apple's doing a nice little bit of a correction here. If the daily holds true, as we see with some of the others, we'll see that resume. But the weekly here looks like it's showing a little bit of exhaustion. So again, I'd love to see this possibly just come down a little bit further, connect here, and then take off. But if it doesn't, if it does produce a bullish and candles start to break up above these highs, and especially if a week's time we've closed up above these rejection wicks, then that would be potentially a nice positive sign. So let's see how that works its way out. Amazon looking very close to a nice little breakout of resistance here. So there's a nice consolidation and a range, and it really is closing up near the highs. So we could see this just push a little bit further. We are in a very nice bull market at the moment, and so it pays. Obviously pays in terms of actual rewards, but also pays psychologically to assume in good faith that the market is signaling good signals rather than false signals or fake signals. So for example, here we're consolidating. We don't always, especially when one of the differences in the asset classes between indices, stocks, for example, but indices for sure, compared to commodities and currencies, is that they can often, they don't even necessarily have to connect with the moving averages before continuing on. So sometimes I've seen price will consolidate close to the 10 moving average and then just take off anyway. I've seen that happen plenty. Even here's an example. Doesn't really even have to connect with that. So, and that is something that is, I would say, is a characteristic of the indices. Their bullishness, which means that if the market does now decide to continue upwards, that would be within that characteristic behavior. This would still count as a consolidation. And if we'll know, obviously, in 10 years' time, if we look back, if this is an exceptional bull market, we'll know that because the markets will continue to produce these signals that look good, but it's hard for people to trust them because people are also there's clearly a lot of propaganda out there to try to convince everyone for whatever reason that everything is just terrible for some reason. And actually that isn't necessarily the case. Most people's lives are in many ways better than they were 4 or 5 years ago. And so for some reason, there are just certain media types that seem to keep hyping how terrible things are, and it's actually not the case. So the reason I say that is because we could look back and this could turn out to be just a glorious bull market. Quite a special one in terms of the history of bull markets. And don't forget, if this is the first time you're watching this, we've had our corrections already. We've had both a correction through COVID and we had a bear market in 22, 23. So we're really at the burgeoning stages of a new bull run. All right, and it's looking good so far. Let's have a look at AT&T. Really a nice double bottom here. So it is, actually I say that's not true. We had lower lows here. It looks like a double bottom, but not really. We didn't have that divergence, so I wouldn't say that's really nice. But it is trying to push higher, and that weekly looks pretty good. So that looks nice and healthy there. ARC. So I've sort of said it before, and at this point I sort of stand by my analysis that I don't really see the value in. I'm not finding Cathy Wood's and Co.'s analysis. I'm not finding it plausible. I'm not finding, if they were really that good, then, okay, so first of all, it's not unreasonable to think that if a stock or an ETF is really clever, that it would actually outperform during darker periods in a market's kind of, when we're, for example, in a more bearish period, it would make sense if these people were so super savvy that their kind of stocks would be performing better or surviving or, handling the bear market better. We find that isn't the case here with any of the any of the ETFs out of ARC. They're not performing, they're not more robust. And then to find it kind of even more sort of to be more alarming is that when the market's doing incredibly well, they're lagging. So I think that it's reasonable to conclude that these people don't know what they're doing. I think it's like, you can try and spin it any way you want, but if they knew what they were doing, they would be doing fine along with the rest of the market, and they would have handled the bear market better. So kind of, because you don't even have to do any work really when the bull market, it's kind of a rising tide lifts all boats. So if your thing is lagging, then like what's going on there? So that's just kind of a little bit of a kind of thing. I don't really right now have any faith in the decision making. When I watch some of the stuff, some of the recordings, some of the meetings, some of the projections, I think they're just, because I was an early adopter, a big fan of both Tesla, by the way, and ARC, just in case you think that I'm always kind of critical of them. But at the same time, I kind of feel like lately it's just spinning tails the whole time. So anyway, ASML. Remember, ASML produce the machines that produce the kind of a lot of the chips that the big guys are using, including NVIDIA, by the way. So they seem to be doing fine. It'll just continue to push higher. Let's have a look at UK ones. Glencore stays within its range, very similar to the Russell 2000 in terms of just not quite able to escape the range. Here we had a really nice bounce off that. My expectation is, of course, that Tesco will continue up, but that's an unusual candle here. So it is battling a little bit where it is and possibly wants to take a bit of a break, but it looks okay. Otherwise, it'll continue up. Amex. There we go. We've got a nice little bullish inside candle, but it's not just that. The behavior of all of this is beautifully uniform, not very erratic. It's had a little bit of a correction here, so this could very well be that turning point. We'll see if that's going to be the case. The next week, if we break the low first, then it's a little bit, it's not there, it's not ready yet. But if we break the high first, there's the probabilities are will continue up. Berkshire Hathaway looking good as well. So again, a little bit of a triangle pattern forming here. I don't know if you could see that without me having to outline that for you, but that also looks good. So again, it's a beautiful consolidation. There is, when I spoke earlier about being optimistic, about having a bit of faith in the market, that is, if we look back and, this turns out to be a great bull market, then what happens in situations such as this, that it's just likely to lead to a really nice breakout to the upside, and it's going to run when it breaks out of that consolidation. Okay, so one of the ways in which I do my analysis is I ask myself questions from different points of view. So I say to myself, okay, if this is not a good setup, in other words, if the market is going to collapse, then what would I expect this price action to do? Then I would expect it potentially to have a big breakout to the downside, which would be, and I would expect it to sort of close below that 50-period moving average. Then I would have to reassess, because a very strong, healthy market wouldn't do that. On the other hand, should this be very nice and bullish, then I would expect a nice solid breakout to the upside. Okay, there's only so many things the market can do, and there's only so many reasons that the market can do it. Okay. It's not super complex, guys. We don't need to overcomplicate stuff here. At the end of the day, most people either think that markets are going up and we're in a bull market, or ultimately they think we're in a bear market. That's it. And one side always wins. One side is always on the right side of that. So, and not to say that they know for sure they're on the right side of it, they just end up being on the right side of it. But it does appear as though we're more in a bull market now than a bear market. And again, there's always a discussion, people saying that you never really realize you're in a bull market till right at the end. That's when people start jumping in. And that's why I spent so much time saying, look, right from the beginning, I'm saying, look, I think we're in a bull market now. I've been doing that for the last year. And it's not trying to get credibility. I don't really, ultimately, it's just, if I make money, I make money. But my point is this, is that I wanted to highlight it on the record that there were lots of warning signs or universal, sort of the universe highlighting that we are in a bull market. That's all. Okay, so Coca-Cola looks fine. That could be a potential setup there to continue to the upside. A little bit of a consolidation there. We've got BP back down within the range. But again, don't forget that BP and Exxon are both sort of highly correlated with crude oil. Exxon was performing slightly better. It's not as far back into the range. It's halfway back in. Let's see if that can push its way out. We've got General Motors also continuing to push up. That all looks really good as well. You can see that bump off that 50 mark, that rejection. So you get some selling happening there, but the market has continued to push up. So that looks good. We've got JP Chase also looking good. Again, we've got that nice little bullish candle in the right area here. So we could see a possible move to the upside. This is very similar to some of the patterns we're seeing in other charts, but also, again, not necessarily a bad thing. A little bit overextended here, but again, I'd be looking for some buying opportunities in this area. Let's see if anything happens here and it pulls back and then continues on. So there could be some good possible for swing traders. They might be looking for some of opportunities in those charts this week. We've got Adidas Here's a good example. Here's Adidas kind of attempting to break out and then pulling back and having a deeper correction. But even here, it's still looking relatively healthy, in my opinion, on the monthly. This is a good area for it to turn around in. Also a good area for it to turn around into anywhere kind of, I'm going to mark it on this time frame and just kind of say, look, that area there is a really good place for it to turn around off the tops of these, which brings it down to about here in these areas here and could still go. So we'll see if it manages to do that. Meta. Nice little mini uptrend here to the upside, battling in this area, but for the most part, and you can see that area here, you can see what that is. It's still pushing up. All right, Morgan Stanley, again, nice little pullback into this area, and also possible turnaround point for that. So nice little bullish candle there. Nvidia. All right, so worth noting, we've got another red candle here showing a bit of exhaustion. We also know, it's interesting. How often do you hear of a company that the problem is because they've actually, their stock price is so high that the employees who had stock options are all now millionaires, where they had a $70,000 salary contract, but they also had stock options, and now they've got anywhere from like 1 to 10 million in their bank accounts, or at least the option of that, and therefore now they have the option to retire. So they're having a retention issue, which is only funny from the sense of it's really not a problem that you would have expected companies to have. But yeah, so they're encountering some retention issues there, which is interesting. So for now, let's just see if we break the low of this. I would consider that significant just to start a bit of a correction to the downside there. We've been sort of overdue for one for a while, but let's just see how that goes. And of course, there was the we'll just see what happens with the price there. Keep an eye on that. Netflix also looking good, continuing to tick high, not worried about that. PayPal back down at the bottom of the range of it and actually producing that bullish candle here. So will it find support? Let's see, but not looking good. As I said in one of the previous episodes, because I don't live in the US, I wasn't aware that there were terrible service issues with PayPal and limitations that I haven't encountered. Because for me, it was, occasionally I use it just to transfer money, and I have one, but I don't use it very often. So I think if you're using it on a daily basis, then apparently this is where the problems start to show up. So the product is not doing well. Spotify continuing to tick up. Nothing. There's a whole lot of bullish signals here, so that looks like that wants to take off. Then we've got Spider. Also, again, battling with this resistance level, but also looking good. I think it's going to break through. Well, we'll see if it's this week, but it looks like it'll break out, and if it does, it'll just head straight up to the next level. FedEx, also looking good. We highlighted this area before, so this is a nice little kind of sign that potentially it's looking to do that turnaround. We'll come back to that next week. Tesla, sort of continuing to go sideways here. Let's see if it can break out to the upside or break out to the downside. So remember, that's what we're really looking for. It's stuck between the lows and the highs and has no clear direction, but it is stuck within a larger or longer term downtrend. And in order for me to reassess that, well, first of all, get it above the 50 on the weekly, and also get it to start sort of breaking through some of these levels. This level here would be major. If we started to break and close above that, forget about 200. If we break and close that above that, then I would say, yep, now we're starting to really see a potential shift back up to the old highs, but we're not there yet. It's too soon to say anything about that. Vanguard continuing to tick up. Again, pullbacks into this area could provide some potential buy opportunities. And then Walt Disney, the last one on the list, again, in an area here that I've highlighted in green, looking to see if this will turn around, if it's going to do that. All of that looks good so far. Let's look at bonds quickly. So bonds, I was saying from last week, they've started to climb a little bit, and all they really did this week was go sort of sideways. So battling that sort of 50 period over here, whether they're going to get above it or not. And I'm not, by the way, just when I talk about, battling the 50 period, I'm not saying that, orders all hinge, the success or failure on moves all hinge off a round number or all off a fib level or a trend line. It's usually a combination effort. You usually get algos as well that kick off with moving averages. It's a really nice, simple thing for computers to detect if prices hit a moving average. So you get a lot of different things. And sometimes it's a fib level, and sometimes it's both a pivot level and a moving average or a trend line, and sometimes it's a moving average. But I do see how the market reacts to moving averages, and one of the reasons for that is often is algos, or just at least computerized trading where they detect that. Okay, so Eurobond as well continuing, but didn't really do anything over the last week, but that was a really nice strong signal. So I would still expect this. It took a bit of a break after that big move, but I still expect that momentum to push a little bit higher. Let's wrap up on cryptos. So just stuck within that range. So this behavior here is very similar to some of the indices we've seen or some of the other tech stocks as well. They're largely still stuck within this range. And I do ultimately expect them for now to break out to the upside. Think of this as them just treading water, taking a bit of a breathe after the big move up. And while the rest of the market's doing that, also here, this looks very similar to, some of the other charts we've seen, Berkshire Hathaway, for example. And here I would also, a nice pullback down here would be really good value for buying, but they don't have to do that. So they can consolidate for a while and then just take off. So Bitcoin looking fine to me. Not really tradable, but in terms of investing sort of where it is, I'm not seeing any high risk stuff. I'm just seeing a consolidation. And Ethereum potentially coming back into this area. This is a great area for it to possibly find its feet and then turn around. So let's put a little bit of a kind of a block over there. Let's see if we get that this coming week. Got Solana coming back down to test this level. Again, a bullish candle this coming week would be a good sign. So far, it looks like it may just do that. So let's see if we get a bullish candle in this area. I'll just draw one in, see if we get a bullish candle like this. Let's see what happens. And then we've got Cardano coming back down to the, so of the whole lot, Cardano is the weakest. It's definitely lagging. It's not so much a massive performer. Binance also doing okay, also failing to get through at the moment, but it's just the same as everyone else, just battling. It's had a big move up and it's just doing that consolidation. So there we go, ladies and gents. I think I can leave you with this for the moment. The markets seem to be in very good spirits. They look like they're going to try to finish the month higher up. And let's see, I think I'm watching bonds at the moment. I'm not seeing any real red flags. I think really the market is going to attempt to just tick along as it can towards November. And if it does start to go into a bit of a coma, well, we'll see that pretty much as we go through this. But right now, and as I said, I see some really nice opportunities with the currency pairs, the crosses, the indices. Some of them look good, and there will be individual swing trading opportunities on some of those equities. So there's actually some decent stuff going on. And I will leave you with that. Don't forget to risk manage appropriately and responsibly. And we'll see you in the next episode. Thank you.